Today on the Facts of Life Insurance, which is better, term or permanent?
Dave Ramsey would say, hey, term is the only thing you should ever buy. But here's the thing, maybe this is anecdotal information, but nearly every wealthy person I ever worked with already has a permanent life insurance policy. I don't think the permanent insurance is making anyone wealthy. I don't think that at all. But I think the type of decision makers who are those who can attain wealth in one generation are also the type of decision makers who buy permanent insurance. Maybe they weren't wealthy 30 years ago when they bought the policy. The fact is that they bought permanent insurance. Now, I recommend term insurance is at least as often as I recommend permanent insurance. But you, as the consumer, should see both sides. My job is to advise you, to tell you what the reasons are for buying term and the reasons for buying permanent, and let you decide. And then let's find the very best of what we're talking about, the very best of what makes the most sense for you and your family. And there is no wrong answer. Permanent insurance, and what I'm talking about is whole life, universal life, variable life, indexed universal life insurance. Typically, we go with some sort of universal life. It's more flexible. The death benefit can be reduced. The premiums can be lowered or raised. It's a more fully disclosed product of insurance. In other words, you can see where your premium dollars are going. You can see what the expenses are. You can see what the mortality charges are. And if you need to skip a premium for 1 year, then the policy won't fail. People use whole life as a characterization, and actually, whole life is actual product type. It's different than universal life. But in whole life, if you miss a premium, you go into what's called non-forfeiture, which is somewhat of a lapse situation. It changes the policy completely. You know, maybe folks who've been around the block and have been in the business long enough to see some older universal life policies fail think that all universal life policies are risky. Two things. One, mortality rates are more favorable. The premium cost of mortality charges and the policy are lower. Universal life policies have a secondary guarantee that's available, which guarantees the death benefit for some specified length of time. It could be to age 80 or it could be to age 120 or anywhere in between. Second, interest rates in life insurance policies right now are a lot more conservative than they were 20 years ago, where insurance companies were putting out material for clients that would show a universal life policy earning 12% interest, and that's just, we think about it today and it's ridiculous. But we're probably about as low as we're going to get right now on the guaranteed interest rate, which is a good thing. At this point, I can see that some policies may outperform the original sales illustration, where I'm not sure that that's ever been a likelihood. If interest rates do start climbing, then the interest rate that's credited to your insurance policy could go up. It could go beyond what we would predict. Those guys who favor whole life, you're possibly a little behind the times. I know that the Northwesterns of the world, New York Life, Mass Mutual, Guardian, we have a history of paying dividends in the 5 to 8% range. Well, we're not buying insurance 10 years ago. We're buying it today. If you ever bought a house or refinanced a house, you've probably gotten some sort of postcard in the mail or multiple postcards talking about protecting your mortgage. That's a bunch of hooey. It's life insurance is what they're selling. They're selling life insurance, and they're selling it without an exam, and the prices are higher. And it may be a decreasing term, which is just incredibly asinine. Why would you buy life insurance that's going down every year? The dollar itself is worth less through inflation. So you're losing the value of your policy through inflation and through real dollars. Folks refinance their house every 5 to 7 years. So you're going to start with another 15 a year or another 30-year mortgage. You're going to have to redo your life insurance every single time. That doesn't make any sense. If it were me, I'd want an increasing term policy. If you could buy that, can I get a term policy that goes up $100,000 every single year? People's needs change, and they change often. 10 years ago, I didn't have any children. Now I do. 15 years ago, I wasn't married. I am now. I said earlier that there's no right or wrong answer. Here's a wrong answer. Don't buy 30-year decreasing term insurance. That's the wrong answer.